Right, learners, let's carry on with the cash flow. So in the previous one, we looked at the note to do with the reconciliation between net profit before tax and the cash generated from operating activities, and we got a final answer of 906,720. Now this is a note, so there's quite a lot that goes into calculating that figure, so that's why we do a note, and that figure is then transferred into the actual main body of the cash flow. Now remember, right at the beginning I said to you that your cash flow is made up of cash from three different sources: the operating, the investing, and the financing. So we are focusing on the operating now. So we've got this 906,720. Now there are three material items that are important that are to do with your operating that we have to show, and that is your interest, your dividends, and your income tax. Now the important thing that we need to remember with this is that it's the amount paid. It's not the expense. Now let's just make sure you understand the difference. The expense is the cost for this year. So your income tax is a percentage of your profit, and that is your expense. But if you still owe SARS money, you wouldn't have paid it all, in which case the cash amount is not necessarily the same. So let's focus on these, and the first one I'm going to start is I'm going to look at the income tax. Right, now from the extract from the income statement, we were told that our income tax is 30% of the net profit. So it's going to be 30% of this figure, an amount of 253,290. Now that's the expense for this year. But we were told in the balance sheet that under our current assets, we had a SARS income tax. And remember, I put an asterisk. I said this is material. This wasn't included in your trade and other receivables. And in the current year, there's a debit for 7,500. That means SARS owes you money. So you must have overpaid. You paid more than what the actual income tax for this year. But at the beginning of the year, you were given the SARS from last year of 7,750, which means that you still owed SARS that. So although it was income tax from last year, it was a debt. You had not paid it at the end of last year. So the first amount you're going to have to pay is that 7,750. So right, so now let's, using these figures, let's go and calculate the actual income tax paid. Now you can either do this calculation just as a straight table with using a calculation or putting the figures in brackets, or you can look at the ledger account. So I'm going to look at both for you. So your income tax, the expense for the year was 25320. We are told that at the end of the year, remember under the 20.4, just looking back here in this, we had overpaid SARS by 7,500. It's a current asset, so I know I've overpaid. So that means that I have actually paid more than this. I not only paid this year's income tax, but I also paid 7,500 too much. That's why SARS owes me money. But at the beginning of the year, there was an amount of 7,750. Now that was a liability at the beginning of the year. You owe SARS that money. So the first lot of tax that would be paid this year would be that. So your amount of income tax paid for this year, the amount of money that has gone out of the bank in order to pay tax, is an amount of 268,540. Add that up. So that is what you're supposed to pay for this year. You paid too much, so you have to add it on. You also paid last year's. So this is an outflow of cash of 268,540. Or if you want to, you can do this as a ledger account over here. Now if you're doing a ledger account, remember you had an opening balance, so you would have owed SARS money at the beginning, so would have had a credit balance. During the course of the year, you would pay your provisional tax plus any other amounts that you're owing. We don't know what that amount is. In fact, that's the figure we're trying to work out. That is your bank figure. What we do know is that our income tax is 253,290. So you would have debited income tax, your expense, and you would credit the SARS account because that's what you owe. So that's a double entry, and we revised this earlier. And then you were told that you had a debit balance of 7,500. Now, you must remember that a debit balance means that the balance for the 1st of March next year is debit. It's brought down as 7,500. So your carry down would have been on the credit side. If it's a debit balance, it's a current asset, it's on the debit side. And so now you can balance this out, and you're going to balance this out, and you're going to get the same figure, and that represents the cash that has been paid for SARS. Now, learners, it's important that you focus on this, because in this case you added both. And many learners think you must add one and minus the other. That's not the case here. You can't learn a formula. You've actually got to work it out logically. Now let's have a look at dividends. And the first thing we need to remember is that we have an account called shareholders for dividends. This is the liability part. This is what you owe from dividends from last year. So if there's an amount of 52,525, which is exactly what is showing here in your balance sheet. There it is. There's the figure from the beginning of the year. So the first thing you're going to do is to pay that 52,000. That has got to be paid. All right. Then from this year, there's always or can be two dividends. The interim dividends is always paid. And so from a cash flow point of view, that's what you need to know. The final dividend, on the other hand, is only declared. And so it is not paid. So what you've got to do is sort out the information the way they give it to you in order to find out what the interim dividends were. Remember, the interim and the final, yes, will give you a total dividends for the year. But what you need to find is the interim. Now, in this exercise over here, we were told that we had share capital at the beginning of the year of 1,050,500, and that the average was 5 Rand a share. So from that you can work out how many shares had actually been sold for that. And then you were told that the interim dividend was 40 cents per share. So your interim dividend is going to be 210,000 times the 40 cents. And so therefore the actual interim dividends you can get is 84,000. So the dividends that have been paid this year is going to be the amount that was owing from last year. And you could ask a question, how do you know it's been paid? Well, if it hadn't been, it would be included in shareholders for dividends again this year. But in practice, you cannot go paying out interim dividends if you still got a debt owing from last year. So it's a logical assumption that they would have paid that. Plus you've paid the interim, so into your cash flow goes the 136,525. That is the amount that's paid. Now, what you need to note is that if they give you final dividends, and in this particular exercise, they actually just, it's not really easy to work out the number of shares, but you could do it. They bought back 35,000, and that there were additional shares sold through the year, and they don't tell you what it is. So we don't know how many shares we've got at the end of the year. What we do know is that there was a final dividend of 32 cents per share. Now, if a final dividend means you haven't yet paid it, and so your shareholders for dividends figure, this 133,440, that is your final dividend. It would not have been paid this year. It'll be paid next year. So your final dividend 133,440, but that has not been paid. Now the reason why I'm telling you this is you must just watch, because sometimes they give you the actual total dividends for the year, and if you add those two up there together, 8, 11, you're going to get a figure of 141,840. Sorry, my apologies. It should be 217,540. 16440. That will be the total dividends. But if you were given that figure, you would have to subtract this final dividend, because remember, this is not being paid. So the only one that's been paid is the 84,000. If you look at the ledger accounts, you would have had the opening balance, and the first thing you would have done was to pay that. So you would have had a bank, and that's part of your cash flow, 52525. In your ordinary share dividends account, the interim dividend would have been paid, so that's 84,000. But the final dividend is going to go to the shareholders for dividends. So the 133,440 double entry goes into shareholders for dividends. There's the double entry. But the important thing, this has not been paid. So the amount paid is the from last year plus the interim. And then lastly, the interest is the other material item. Remember, I said to you, there's 3 material items. In your exercise, you were given the interest expense of 164,450. There is nothing under current assets or current liabilities here to say that you owe any amount. There's no expense payable or expense prepaid, in which case you'd have to adjust it in the same way as you did for SARS. They don't give you any information. Or if they tell you that your interest is capitalized, then you know it would have been paid as part of the loan. Therefore, that whole amount has been paid. And so therefore, our interest is the full amount. It's an outflow. Our dividends is an outflow. Our income tax is an outflow. And so we subtract all of those from that original amount. And our cash from operations is 337,205. A lot of little parts, learners, and you need to know these little parts, because in an exam they could well ask you only a certain part. For example, they could ask you only to do this part, or they might ask you to show only the amount of income tax paid. And if you only practice exercises in full, you might battle in the exam with knowing what comes into what sections. So you need to practice it.